All right, and despite market volatility after President Trump's announcement of the largest tariff increase in almost a century, foreign investors maintain near-record holdings of U.S. Treasuries in April. However, the allure of the dollar's global status has taken a severe hit. Foreign holdings of U.S. Treasuries in April total $9 trillion, down about $36 billion from March. This was according to data released by the Treasury Department. The April figures were the second highest on record. Japan and Britain's holdings increased while China declined. The drop in overall holdings was in line with market expectations. Stock prices fell after Trump's Liberation Day tariffs on the 2nd of April. In the wake of the trade policy shock, Treasuries had their deepest drop in over 20 years. The market reaction, along with the dollar's sharp decline, caused international investors to fear a mass flight from American assets. The question of the Treasury status as a safe haven asset started doing the rounds in global markets as well. Even now, market for U.S. government debt remains on edge over tariff, fiscal and geopolitical concerns. Day-to-day price moves have been another focus. The failure of treasuries to rally during the recent Israel-Iran attacks renewed questions on their haven status. The dollar has lost over 10% of its value against the euro, pound and the Swiss franc since Trump took office, and is down against every major currency this year. The last time the dollar plunged this fast was in 2010. Back then, the Federal Reserve was frantically printing money to prop up the economy in the wake of the financial crisis. Separately, U.S. importers have said that their foreign counterparts no longer want to be paid in dollars. They instead ask for settlement in euros, Chinese renminbi, and a Mexican peso and the Canadian dollar, looking to limit their exposure to further swings in the greenback. The volatility in the dollar complicates pricing decisions and poses earnings risks for businesses. Now, for investors, Trump's policies increasingly indicate the dollar is falling out of favor. At the same time, gold is fast eating into the dollar's share in global central bank reserves. The yellow metal is leading safe haven asset this year, robbing treasuries in dollars' favor among investors despite several risk events.